Welcome back, gang. So please welcome Ric Edelman to Money Talks. Ric is a best-selling author, the co-founder of Edelman Financial Services. He's been named the #1 financial advisor in the U.S. by Barron's. He's been inducted into the Financial Advisor Hall of Fame. Ric and his wife founded the Edelman Nursing Career Development Center in partnership with, I think it's called Innova, I was reading earlier. And of course, anyway, the list goes on and on. I was actually looking at some of your books earlier. I saw some books on kind of teaching kids about money and the basics of money. And so if you just do a search for Ric Edelman on Amazon, the list goes on and on and on. Well, welcome to Money Talks, Ric.
Thank you, Bill. It's great to be with you. And of course, my newest book, The Truth About Crypto, just came out 2 weeks ago.
Saw that as well, and I want to talk about that. But let me ask you first. You've seen a lot of cycles, right? What does this cycle, or what does the market that we're in kind of look most like to you historically?
Well, as you noted, there are a couple of items that are familiar, but also brand new. In the familiar category, this is the 7th time in Bitcoin's history that it has fallen more than 50% in value. So, we've seen this movie before. On the other hand, we haven't seen correlation the way that we have in the past 9 months. Bitcoin has always been a non-correlated asset or a negatively correlated asset. And that was one of the points of pride for folks in the Bitcoin community, saying that it's a wonderful addition to a diversified portfolio because it zigs when the others zag. That hasn't been true since last fall. And it has people worried as to whether or not that thesis still holds water and whether or not this weakens the argument for investing in Bitcoin. I think it's too early to tell. I think the jury is still out on that one. But clearly, part of the reason, perhaps the dominant reason for the correlation that we've been experiencing is because of the new institutional engagement. For the first 12 years of Bitcoin's life, there was all individual investors and initially, a bunch of outcast investors, anarchists who were trying to bring down the global financial system with this newfound digital money. And they were not at all engaged in the financial markets. Well, now we have some of the biggest investment entities engaging: endowments, pension funds, hedge funds, billionaires, major insurance companies. I mean, everybody everywhere seems to be starting to pay attention to this. And so last year, we saw even more trading by institutional investors in Bitcoin than we did retail investors.
Yep.
And so when the sell-off began on the stock market last fall, those institutional investors reallocating their portfolios and selling stocks, they're selling Bitcoin like they're selling NASDAQ. Their attitude is, we're selling everything everywhere all the time. And so Bitcoin got caught up in that, and it's therefore not got the non-correlation game anymore. Mm-hmm. Will that persist? Or will the institutional investors finally get the memo reminding them that Bitcoin's a non-correlated asset, that it has nothing to do with the stock, bond, or real estate markets, and that they need to start treating it differently? Time will tell. We'll wait and see. But in the meantime, most are considering this just part of the ongoing trend of what's happening in the global financial marketplace as we fight our way out of COVID and dealing with the war in Ukraine.
Yep. So when you think about just the broader markets, right? Like you look at the stock market in general and what's happening with interest rates and how, labor force participation and the MSI numbers basically are saying we're headed towards recession. In your opinion, are we in a recession? Yeah. Does this look like the 70s for you? Are we headed towards prolonged stagflation? And is that going to be a drag on broader assets for a long time?
I think so. I think yes to all the above. We're in a recession. This is not 1982, it's 1972 in terms of a metaphor or analogy. Most folks are unaware and unprepared for the scenario that we're in today because the 70s was so long ago. It was over 50 years ago. And most folks don't have a personal experience of the investment marketplace 50 years. Their personal experience is anywhere from 1 year to 40 years. I mean, I can occasionally find people like me who got into the financial markets in the 80s, but I'm now 64. And so there aren't too many people who have 40 years of investment experience. So if you have less, if you've got 5, 10, 20, 30 years of experience, that means your experience is the 80s, 90s, 2000s, and teens. all good. We've seen 40 years of declining interest rates, nothing other than that. We've seen 40 years of an incredibly booming stock market and real estate market, nothing other than that. Oh, there have been pockets here and there, the dot-com bubble, the 2008 credit crisis, the pandemic, but those were short-lived experiences. The crash of 87, those didn't last long. They weren't long-term sustainable trends. What we're now experiencing is a generational shift. Just like we had transitioning from the 60s and 70s into the 80s and 90s, where we had interest rates that are now, for the first time, coming down. For 40 years, interest rates have been steadily going down, which means for 40 years, bond prices have been steadily going up to the point where people think that's all that bonds ever do. Anybody who's ever invested in a bond fund or a bond only thinks bonds rise in value. They don't understand the interest rate risk that they're suffering. Well, now with interest rates rising for the first time in their collective experience, they're now seeing the worst bond market since 1842. And most people don't realize the calamity of this. They don't realize that this is not a short-term thing. This is a long-term trend. We're not going to see interest rates returning to 0 point nothing like they were over the past decade. We're going to see continuing increases in interest rates over the next several months, certainly the rest of this year, possibly, probably well into next year, Q1 at least, as the government tries to rein in inflation and rejigger the economy to get it moving again. So in the meantime, we can fully expect stagflation, as you described it, the stock market languishing, the bond market languishing, and we haven't even begun yet to see the real estate market languish, which it's going to do. Housing sales dropped 16% in March. We haven't seen anything yet. The housing market is going to implode just like it did in 07 and 08 because it was an overbought marketplace. Prices rose too fast, too high, and to an unsustainable level, just as the stock market did during the pandemic. This is all what happens when you throw $6 trillion into the American economy. Forget about the trillions globally.
Right. So let's break that down. If you're 30 years old and you have a 30-year investment horizon, it may not matter in the big picture. But what do you say to people who have a 2, 5, and 10-year investment horizon at this point?
If your time horizon is 2 years, you need to radically alter your allocation. You need to focus on safety first, preservation of capital, and quit trying to get rich quick, which was easy to do over the past 2 decades. That party's over. It's done. And the fact that you've already lost a lot of money over the last 6 months, lick your wounds and prevent yourself from losing even more money over the next 6 months. So if you're a short-term investor, which is anybody under 3 years, you need to be in a safe scenario. If your outlook is 5 or 10 years or beyond, you can take a much different perspective. You can recognize that ultimately this too shall pass. And today we will turn around in the future at 2030. We will look back at 2022 and say, wow, that was a great buying opportunity. So you need to have your head on straight. You need to recognize that investing is about long-term. It's not about short-term speculation or get rich quick, even though that was certainly readily available since this time 2 years ago when we hit the bottom of the pandemic in 2020. But that's an aberration. That's not normal. The stock market's supposed to earn 10% a year, not 2% a day, which is what the NASDAQ did yesterday. So we got to get our heads on straight and get realistic expectations so we don't hurt ourselves. Yep.
Yeah. So when you think about crypto as it relates to this, do you think that we need to bottom out in equities before the correlation ends? Or do you think it basically starts to look like gold, which should be uncorrelated, or at least, is should be inversely correlated, if anything, in these times? I mean, or is there some other factor that would cause this correlation to end?
I think we should simply ignore the correlation argument. It's a facade. It's a canard and a facade. It takes our eye off the ball. The real issue in your decision as to whether to invest in crypto and which crypto, because as we know, that's a huge environment and the tiny little word of crypto. Bitcoin and Ethereum are the dominant players. We can just focus there. For you to decide whether to invest in this area, you need to examine the fundamentals, just like you would for investing in any industrial sector or in a specific stock or any piece of real estate that you might choose to invest in. what do I believe is the long-term outlook for this asset class or this specific investment opportunity? And when we examine that, we begin to realize that blockchain and digital assets are still very new, very early, very young, still emerging, developing, growing. And this is the ideal time to engage. And eventually the institutional investors will understand that. Let's remember that institutional investors are never early to the party. They always show up late and they always wreck things, as they've demonstrated with Bitcoin. They didn't get involved in Bitcoin until the last year or so, at the time when Bitcoin was at or near its high. And that's why they engaged, because they finally said to themselves, we can't keep missing this party. They realized that they missed the first 10 years out of denial and arrogance, and they stopped sitting on the sidelines, and they got invested just in time for the global economic environment to implode, forcing them to sell their equities, and they're scarfing up their Bitcoin in that same notion. So don't turn to the institutions as your barometer for whether it's safe to get back in the water. Ignore them. They're going to come along when they finally realize they did it wrong in the first place. They're reevaluating it wrong again, and they're going to finally figure it out later. Don't wait on them. Don't pay attention to them, because they're not the measurement by which you need to make judgments.
Yeah, and when you think of the fundamentals, right, for those assets, you mentioned Bitcoin and Ethereum in particular. What excites you as somebody who would make an allocation, who comes from the traditional financial world and probably not into the ones and zeros of how proof of work or proof of stake works, for example?
Yeah, I have been widely known as a futurist in the financial services industry. The 11 books that I've written are all best-selling and forward-thinking. My last book, The Truth About Your Future, from 2017, was all about exponential technologies and how it's changing the world. My new book, The Truth About Crypto, which just came out 2 weeks ago, #1 at Amazon, is all focused on this space. I got engaged in this space. I first heard about Bitcoin in 2012. And so I've been in the space a pretty long time, and I realized very early, and I still remain convinced, that this is a transformational technology. Blockchain and digital assets are going to revolutionize the way commerce is conducted on a global basis in an unprecedented way, just like the internet did back in the 90s. And we all lament that we didn't buy Amazon, Apple, Google, Microsoft way back in the 90s when we could have, should have, would have. Well, here's the next opportunity, and I don't want to blow this one. I don't want to miss this one, because it only comes along once in a generation. So why is it a big deal? It's real simple. It changes the way we move money around the world. The global banking system is the last analog industry on the planet. Everything else has gone digital, from airline miles to the distribution of goods and services. For some dumb reason, we still print money and carry it in our pockets. And it's ridiculous. We don't do that individually. Our paychecks are direct deposited. Our bills are on auto bill pay. We're using credit cards, debit cards, PayPal, Venmo, Zelle. We aren't using paper to pay for goods or services any longer, except maybe tips to a bellman or a homeless person to help them out. And it's ridiculous that the Fed is still printing money. And the banking system is horrible. They have limited hours, lousy service, high fees. It's ridiculous. And blockchain and digital assets disrupts all of that, brings it into the 21st century to catch up with everything else. And that's why it's transformative. And that's why Bitcoin as a store of value is so exciting, because it's all about supply and demand. Only 21 million of these things are ever going to be invented or created. 19 million of them already out, been produced, 2 million left. And they're going to be released over the next 120 years on a very slow set schedule, which means there's a fixed supply. There's 300 million people on the planet who have bought Bitcoin so far out of 7 billion potential buyers. So as the adoption grows, the engagement grows, the price has to skyrocket. It's simple supply and demand. That's the case for Bitcoin. Ethereum, I'm even more excited about, because Ethereum has the opportunity for business use in a way that Bitcoin does not, because it's programmable. It's software. You can use it like the way lawyers use contracts. I will give you my money if you do something for me. And this is a valid activity in any industry across the planet. And we're already seeing this adoption everywhere. And it's very, very exciting. By the end of the decade, We will be a fully digital economy. McKinsey says 70% of the global GDP will be digital, and Bitcoin and Ethereum will be leading the way. That's the use case that you need to be focusing on, not the fact that for the past 9 months, Bitcoin and Ethereum are oversold because institutional investors are selling everything in a bear market. That story is short-term, irrelevant to the fundamental, amazing development of the technological innovation that this technology represents.
Awesome. So you answered part of my last question. So it might be a little bit of a repeat, but I love the lawyer analogy for Ethereum, because obviously it's a smart contract system. But if you have a minute with somebody who's like, look, I don't get this crypto shit, right? Which is, probably, even for people who have invested, it's probably 90% of the population, and they're just following the herd. But if you have a minute with somebody who's a little older and is just like, hey, look, I don't get this crypto stuff. Why are people throwing away their money on this garbage? I mean, what's your 1 minute response to those people?
Well, I'll give you two different answers depending on who I'm talking to. My first answer is it's the same thing as baseball cards and artwork. There are people who love this stuff, and the market for that is big and growing rapidly. And that's why people are willing to pay $1 million for a Babe Ruth or an Honest Wagner baseball card. Doesn't have to make any sense. You don't have to understand it. You simply have to recognize you can exploit it. That's one answer. The second answer is to simply recognize that we are living in a technological digital world, and the advances of computer technology make us able to do things faster, cheaper, safer, with greater transparency and inclusion. That's what this is all about. This allows more people to get engaged in the ability to save money, store money, and make money on a global basis than ever before. The United Nations says blockchain tech is the greatest single weapon we have for the elimination of poverty on a global basis.
Yep.
That's why this is a big deal and why you need to pay attention.
Yep. I couldn't agree more. So look, I would love to discuss the future of exponential tech with you for hours. But what I'd love to do, I know you and I are going to be seeing each other in a couple of weeks, and we'll probably get into this as well. But I'd love to have you back and get into this in more detail and actually take a look at the broader markets and see how all this is playing out, because we've got a lot of worried people right now and they need some perspective. If you're under 35, you've never seen anything like this because you've never lived through a recession, right? I mean, that's an amazing thought for those of us who remember the gas lines in the 70s and what it was like in the 87, 88 downturn, and again in the 90s downturn.
So here's a statistic most people are not aware of. The Dow Jones Industrial Average in 1979 was the same as it was in 1969.
Wow.
People are not aware of what a long-term and stagflationary environment can be like. And I'm not suggesting we are necessarily going to have a 10-year drought, but you need to recognize these things can happen. And we are in a combination of circumstances right now between lofty prices in the variety of financial markets, stocks, bonds, real estate, the culmination of the incredible trillions that have been thrown into the economy, which devalue currencies on a global basis, fighting the pandemic, which is still with us. Mm-hmm. The uncertainties of the war between Russia and Ukraine that are creating global food shortages that we will begin to see in the fall, and the supply chain shortage that we are already experiencing. These are combining to create the perfect storm. And it's not something that's going to simply go away in a couple of weeks. People need to reset their expectations and recognize the environment that we are in going forward instead of simply relying on the last 40 years, because this ain't got nothing to do with any of that.
Yep. Yeah, totally agree. I completely agree with your outlook. Let's pick this up again in a few weeks and see where we are relative to the hypothesis. Obviously, the bond markets are going to lead the way, but right now it doesn't look good. And we'll see. But anyway, Ric Edelman, you're awesome, and I look forward to spending more time with you. And thank you for giving us some time on a Friday and a holiday weekend.